Brokers Digest, a webcast series by The Edge Singapore, discovering market opportunities with you. This episode is sponsored by Tiger Brokers.
Hello and welcome back to another episode of The Edge Singapore's Brokers Digest. I'm Felicia Tan, and this week we will be talking about cryptocurrencies, a hot topic at the moment, and whether it is a buy or bust. There is never a dull moment when it comes to cryptocurrencies. Bitcoin, the most famous cryptocurrency, has been through a wild ride. It was barely trading at $1,000 in early 2017, but surged to hit more than $20,000 by the end of the year. A sharp correction followed, and just as many market observers started to write of Bitcoin and other cryptocurrencies as a fad. However, this asset class started proving them wrong. The wider market has seen a strong recovery rally over the past year or so, but Bitcoin stomped past all benchmarks and indices. A growing crowd of big institutional names started to lend it legitimacy as an asset class. In fact, Bitcoin hit an all-time high of over $63,000 in April before dropping once again to around $34,000 now. Elon Musk, the famous Tesla boss, was a big influence on Bitcoin's movement, both up and down. He first said Tesla would accept Bitcoins as payment, but very quickly backtracked, citing environmental concerns. Bitcoin faced further issues in late June after a cryptocurrency crackdown in China. Now, Bitcoin is just one of the many cryptocurrencies currently on the market. However, its status as the first cryptocurrency to be placed on the market means investors see it as a benchmark of sorts in an asset class without an official benchmark. Today, there are other cryptocurrencies, of course. These include Ethereum, Binance Coin, and Dogecoin, just to name a few. Now, onto the million-dollar question. Is there a future for cryptocurrencies, and is the asset class worth investing in? Simply put, are cryptocurrencies a boom or a bust? Let's find out with this week's guest, Ian Leong, Head of Business Development at Tiger Brokers Singapore. Hi, Ian. Welcome to the show. Now, let's begin here. What gives Bitcoin or other cryptocurrencies value?
Hi, Felicia. Thank you, and I'm glad to be back to the show. Well, to answer your question, if we are to see Bitcoin from a perspective as a store of value, similar to, like, say, for example, fiat currency, we must first ask ourselves what gives fiat money its value. There are 6 criteria that traditionally determines if the currency is a successful store of value. Well, the first criteria and the most important one is scarcity. In layman terms, scarcity means a limited supply. Central banks control our money supply by making sure it's not too large, causing the value to decline and causing a spike in prices. You will also make sure the supply is not too small, hence causing problems in our economy. Well, the second criteria is divisibility, the ability to be small, in small and incremental units. Thus, in this way, we will be able to use it to exchange for goods and services, regardless of how small the value is. Well, the next criteria is utility. In layman terms, it means that it must be able to be traded for goods and services reliably. That's the purpose of money anyway, and to be able to recognize and exchange for value. Well, if we are to continue down the list, you also need to account for transportability. So it technically means like you are able to bring your money around to exchange it for things. You also must be durable, ability to stand a test of time. And last but not least, is it easy to counterfeit it, right? So if I use these 6 criteria to assess Bitcoins, Bitcoin does have a limited supply, given that it's capped at 21 million tokens. And we're currently right now at 80 million plus tokens right now. And for Bitcoin to hit a total supply of 21 million, we'll need to wait till the year 2140 to do so. On the divisibility, the utility side of things, one Bitcoin now costs about, say, USD 34,000, with its high around 63,700 USD. Well, having said that, Bitcoin is divisible by up to 8 decimal points. As even if its prices would, say, hypothetically hit about, say, $1 million, people are still able to get Bitcoins at a fraction of it and able to use it to exchange for goods and services, regardless of how small the value is. Now, when it comes to the transportability and the durability side of things, Bitcoin is electronic, so there are no issues. And when it comes to counterfeiting it, well, it's commonly known that Bitcoin is based on a decentralized blockchain ledger, because it's highly unlikely. Yeah, but a point to note though is that Bitcoin currently is too volatile, making it hard to be used as a store of value in exchange for goods right now. People in general like stability, because fiat money currencies do appreciate or depreciate, but wide swings are black swan events, and that is value generally is relatively stable. Because Bitcoin will have to be adopted more mainstream. Majority of its tokens have to be owned by the masses before it's an effective store of value. Yes.
So how can investors tell if the asset class is a suitable investment for them?
Well, two things. Like for all investments, we keep things simple by asking ourselves what's our risk appetite and investment horizon. You determine this, you'll know whether this asset class is a suitable investment for you. As mentioned, Bitcoin right now is pretty volatile. At the start of 2020, it was trading at around USD at 7,000 plus dollars. It rose to an all-time high of close to 64,000 in April this year, before dropping to current levels about say 34,000 USD right now. Well, if you are not able to stomach wide swings in near terms, this may not be an asset class for you at the moment. And if you're more inclined towards a trader mentality and have a higher appetite for risk, this is one product which might interest you. Bottom line is, if you invest or trade, do so with money you can spare or lose entirely. Yes.
Some people like the asset class, others don't. What are your thoughts on this? And do you see a future in cryptocurrency?
Well, I do see a future in cryptocurrency. It's a fairly young asset class. With all matters, we have two camps, right? You have the haters and the lovers. Some people see cryptocurrency as the way to go for the future, while others see that there is no intrinsic value in the coins and it's purely speculative, hence no future, right? But well, for things to have a future, it must have an intrinsic value, and people must believe in it. For example, just like say a marriage, yeah, a couple values the relationship, they share together and believe in a long-term prospects together, because they decided to get married, start a family together for the long term. So when it comes to a cryptocurrency, the logic is similar. Do you believe in this product? Do you believe it has the value and can be an asset with a positive upside and be adopted mainstream? If so, there is a future. Now, we are starting to see institutions recognizing it and its value. We have like say Morgan Stanley, Goldman Sachs making Bitcoin funds available to its wealthy clients. We also see PayPal accepting Bitcoin as a form of payment. And we are seeing more and more institutions accepting Bitcoin as an asset class for investment or as a store of value for payment. Even in Singapore, we're also seeing a trend whereby Bitcoin being more recognized as asset class when DBS set up a DBS digital exchange for the trading of selected cryptocurrencies. Now, there are thousands of cryptocurrencies in existence right now. Of course, not all of them will be widely accepted by institutions or the masses. But having said that, looking at the trend right now, whereby more countries and institutions are recognizing Bitcoins per se, I do see a future in this asset class.
So at the current levels, do you think now is the right time to invest in cryptocurrency?
Well, similar to what I've mentioned earlier, it do depends on one's risk appetite and investment horizon. You have a shorter investment horizon, say for example, a period of weeks or months, and looking to trade on the momentum. Based on the charts right now, we do see a strong support at about say the USD 31,000 mark, and it tends to rebound at this level.
Now, more cryptocurrencies are coins are flooding the market since cryptocurrencies gained traction over the past couple of years. Is the market really ready to accept so many different types of coins coming in? And does the market have the appetite to accommodate them all?
Well, as mentioned, There are thousands of cryptocurrencies in the market right now. Your top and highly tradable ones would be like, say, your Bitcoins, your Ethereum, or XRP. While we also have like, say, thousands of smaller and obscure ones we have never heard before. And you're trading at like what, thin or close to zero volume. And coins can be created for any reasons. And I recall one is being called Elon Gate. That's because Elon Musk tweeted, to say that if, let's say, he has a scandal, please name this after him. So, well, just like listed stocks, there are 4,000 plus listed counters in the US market right now, and more than like 40,000 listed counters globally. We don't invest in all of them, or even know the existence of, like, say, most of them. If there is no demand and liquidity, it'll be delisted due to attrition. Thus, to answer your question, it's a relatively new asset class for investors or traders to put their money in. Most will still focus on the more higher visible cryptocurrencies itself, due to, like, say, various reasons like perceived value, adoption, and a high trading volume liquidity. We will have new coins coming in, just like, say, listed companies on the exchange. But ultimately, if there is no demand, no liquidity or purpose, they'll be delisted by the respective exchanges.
So speaking of these various coins, how do you value each one of them, and which, in your opinion, is worth investing in?
Well, people invest for different reasons, and the way people invest are different too. Most invest for the longer term because they believe in their project or company. This should be the reason for people to invest, regardless of asset class. But having said that, I've also seen some trade in particular companies because they feel it's cheap in nominal terms. I'm referring to their stock price. Like, say, for example, its price right now, it's 1 cent. So if I was to buy it and manage to sell it at one bit higher at 2 cents, technically I'll make 100% profit. People do have this mentality, but this is not for me. Like in stocks, I believe in projects, they are legit acceptable, have a good liquidity or trading volume. I'm more to the old school side of things, and I will only invest in mainstream coins like your Bitcoins, Ethereum, and not some obscure coins trading at low prices and hopes to get noticed by the masses and a spike in trading volume and prices.
Okay. So on July the 21st, Elon Musk and Twitter CEO Jack Dorsey will be talking about Bitcoin. What do you think will be the outcome for Bitcoin and other coins?
Well, both Elon Musk and Jack Dorsey are advocates of Bitcoin. Though Elon Musk tweets, comments tends to send the prices of Bitcoin on wide swings. Well, one moment you'll see Tesla accepting Bitcoins as a form of payment. Another moment, he's not accepting it due to environmental issues, and then flip-flopping to saying that, well, we'll accept it if, let's say, Bitcoin mining is powered by clean energy. But nonetheless, these two guys are advocates of Bitcoins and have been promoting the adoption of Bitcoins itself. For this event next week on the 21st, they're calling it the B Word. It's an initiative that aims to demystify, to destigmatize mainstream narratives about Bitcoin, and to explain how institutions can and should embrace it. So in short, it's an initiative by Jack Dorsey to promote Bitcoins, and it's supported by Elon Musk. The near-term reactions on the day itself will be dependent on the comments made by both leaders, but for the longer term and future for Bitcoins and cryptocurrencies in general, if this initiative proves to be a success, it will definitely translate positively to the coins prices in general.
Cryptocurrencies right now don't have a central authority to regulate it. How do you think regulations for the asset class will evolve globally? And more specifically, how do you think it will evolve in Singapore?
Well, lately, we are seeing news like, say, Binance crackdown in the UK, or like China's ban on crypto mining, which was huge news, as they counted for more than 3/4 of the global mining for Bitcoin. And indeed, these are news that are not favorable to cryptocurrencies. But we have to ask ourselves, why are countries reluctant to embrace cryptocurrencies activities in their own respective jurisdictions? Well, it mainly boils down to AML, any anti-money laundering concerns, and the impacts it brings to the financial system in their particular country per se, like capital controls and other reasons itself. But if we are to narrow it down to our local context, I recall years back, MAS did mention that cryptocurrencies was an asset class not regulated by them. Hence, investors have to be careful if they're investing in them. But in the recent years, we have also seen a change in this stance or policy. And we're starting to see the crypto landscape evolving here, one that actually seems to encourage its growth. Yes, the Payment Services Act was launched last year in January. Companies that wants to deal in cryptocurrencies and exchange services can apply to do so via this PSA license. Well, many crypto exchanges and companies have applied for this license, and I believe one of them who was awarded a license was DBS Digital Exchange, a subsidiary of DBS Group. Yeah. Many crypto exchanges and companies seize the potential to set up shop in Singapore due to its reputation and strong financial hub status. Examples would be like, say, your Alibaba Group, Ant Group, and Binance Holdings, as well as Alphabet. The potential of this space is also immense, as the cryptocurrency market in Singapore is still relatively small. I recall an article sharing that Singapore's top 3 cryptocurrencies daily trading volume is only about, say, 2% of what securities trades on a daily basis itself. Thus, with the approval of the licenses and having more crypto exchanges regulated by MAS, and these exchanges offering their solutions to investors here, and when more countries understand and regulate efficiently their space in this in their own jurisdictions, I believe the outlook is rosy for this space.
And that's all the time that we have for today. Thank you everyone for being here with us. Thank you very much, Ian, for your insights. To watch a recap of this episode, you can come back to our Facebook or YouTube pages, find out more about investing through our weekly paper and website at www.theedgesingapore.com. Like us on Facebook and Instagram so you can be alerted to upcoming episodes. And you can also leave us a comment below if there are anything, questions or topics you'd like for us to discuss. Once again, I'm Felicia Tan. With me is Ian Leong from Tiger Brokers Singapore, and we will see you next in August. Goodbye.